The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here with you. I treasure your presence here today. And, folks, what I want to be able to do, my outcome is to help you to become a better money master. But mostly, folks, it is to lay the groundwork, provide you with the tools so that you can lead an inspired life. Because leading an inspired life, folks, that is at least what I believe that it is all about. Hopefully, you're all off to a great start of your workday, your Wednesday workday out there. Let's go take a look at one of our tools. This is the tool I call developing your own success model. And this is an important tool, folks, because success is absolutely a personal thing. You know, for some folks out there, success means money. For others, it means love. For others, it might just simply mean something like happiness out there. Success is a very personal thing. That's why it's best to define success yourself. I said develop your own success model, not somebody else's, folks. Otherwise, if you don't, how will you know if you've ever achieved what you determined to be success out there? Now, to define success, it's pretty simple. You just need a couple of different pieces of the puzzle, the combination to the lock, and that really is made up of philosophies and ideologies out there, folks, and what I like to refer to really as your mental food for thought. And more than that, what you absolutely need is you need to be able to have an open mind to different alternatives, at least appreciate the other side of the debate, you know, that exists out there, folks. And when we talk about that, and that way, you know, when you do that, what you're able to do is you're really able to strengthen your own philosophy. You're able to strengthen your own ideology there. But you need to be able to, and I'm talking every single day, not just every now and then, you need to be able to open yourself up every single day. If you take a look at a trader, maybe you're not a trader or an investor yet, but this is the opportunity and for you to learn about these technologies, for you to absolutely open yourself up each and every day to new information that the market reveals to you. Because I guarantee you, when you are buying something, somebody else is selling. That is the difference between the bull and the bear out there, and each person has a different ideology, a different philosophy of what just occurred in the marketplace out there. So this is a beautiful place in order for you to be able to develop your own success model out there. Take advantage. I always say take advantage of everything that's available to you. Be eager to learn because, folks, I guarantee you one thing. One person does not have all the answers. That's the beautiful thing about everybody here at TFNN. You know, you got a full lineup today with different traders, different thought processes, taking a look at maybe some different indicators that are out there. One person doesn't have all the answers, but we all melded in this beautiful melting pot out here. And that's why we've got two ears and one mouth, folks. That's the beautiful thing about how we were born. You're supposed to listen twice as much as you are supposed to speak. I'd love to listen to you. All I have to do is give me a call at 877-927-6648. Develop your own philosophy of success, folks. It will absolutely be one of the most valuable things that you can do for your guidance system, if you will. Make sure that you can say all systems are a go. So let's go take a look at the markets and see about all the systems that are a go out there. We've got the S&P 500 closed out yesterday at 1433. It's on its way up to the 1462 level. That's going to make a 1.272 butterfly. It's going to make an A to B, a 1 to 1.272. A to B equals CDF. The U.S. dollar index, it's at resistance this morning. We'll take a look at the patterns there. There's a butterfly pattern. There's a Gartley buy pattern out there. So it's at a pretty critical juncture. It's in that 79.50 level. It's really right now trading out at 79.66. The euro hit the initial target of 1.29355, or just in that range. That is a resistance area. It should pull back from here before it decides to make its next move up. You've got gold on its way to 1772, between 1772 and 1792. $20 range out there. You've got gold trading at 1741 right now. Hi-ho silver, that's on its way to 35.12. Silver trading out at 33.72 right now. Natural gas, that's on its way up to the swing point from July 31st. That's at $3.15. It's had a nice move the last couple of trading sessions, pulling back just slightly here this morning, trading out at $2.97. The 30-year bond, the bonds, folks, have pulled back to the .618 level. of the last move up. That is at a support level, which is at about the 147.25 range. Looks to me, though, like bonds actually want to pull back further, down to about the 0.786, 146.17. Again, our call-in number, 877-927-6648. If you're watching us on Tiger TV, thanks so much. If you're not, you can always catch the archive of the show on Channel 9. And maybe you're listening to us on your mobile device just simply because, you went to tfnn.mobi. Today is going to all be about mobile devices. Sometime this afternoon, I believe it is, that Apple unveils their new iPhone and whatever other products that they've got out there. We'll certainly take a look at the Apple chart as well during the day. And let's start off here by taking a look at the ES Mini. If we take a look at, overnight you had the German Supreme Court, or their version of the German Supreme Court, come out and say, yes, we agreed to the European Stability Mechanism, the ESM. And of course, there was a caveat. That caveat was, from a German liability standpoint, no more than 190 billion euros out there. That's the equivalent of, let's say 250 billion in the United States out there. Of course, I don't know how many of those billions are already really sucked up when you take a look at what Spain needs, what Italy needs, what Greece needs out there. So not sure just how long that is absolutely going to last out there. So they gave a go-ahead, they gave a green light, and then a red light out there. And if we take a look at how the market responded, you had the market, this was at about the 4:30 in the morning time frame. I don't have the exact time frame, but you had the market move down, got down to a low. So in that 30-minute session, got down to a low of 14.31 on the ES Mini. Then it moved up into the 14.39, 14.40 area, where it was basically making a 1.272 expansion of its most recent set of swing points. That was from the high that came in at 10:30 a.m. on September 10th, so that was yesterday, when it was at 14.38, all the way down to the low that was, yesterday, Monday, all the way down to the low that was put in at 14.21.50. And if you just simply take that difference and you multiply it times 1.272, add it to the low out there of 14.21.50, that would have given you the price projection range that the ES Mini moved up to. You made a little bearish engulfing candle up here at 6:30 this morning, got confirmation on that next candle. It's already done the 0.618 pullback. Maybe could do just a little bit more than that, and with regard to the euro completing a pattern, the U.S. dollar completing a pattern, even with the futures being up here, it looks like the market may want to sell off a bit. Today we'll see how, this here plays out, and we'll go take a look at the other patterns. How about the Dow? The Dow finally participating out here, folks. The Dow finally, if we take a look at the futures contract right now, let's go ahead and pull that up. Take a look at the continuous contract, and what the futures were aiming for was May Day, May 1st. The high out there, 13,284. We finally, I believe we got to close above it. Let's see. We were trading at 13,340 right now, but maybe I missed that mark. Closed at 13,293. So you closed at 13,293 yesterday. 13,284 was the mark. So it finally closed up over it. Trading over that. What's that mean? Well, the Dow was the one index out there, futures contract, that had not taken out a resistance level. That was your weak link in the chain. The Dow finally getting some strength out there, trading up over that area. I do expect that it'll pull back, just as I expect that we'll see all of the other indexes. May not be today, but I suspect that what we will see is, no matter what it is Uncle Ben Bernanke comes out with tomorrow, it's going to disappoint. If he doesn't come out with QE3, that's going to disappoint. If it's not the wild rice version of QE3, that's going to disappoint. And if it's just a good old, Uncle Ben white rice out there, that too probably is going to disappoint as well. So I expect that that's what we will see in the marketplace. The NASDAQ futures, if we take a look at it, NASDAQ futures got up over their resistance area, did it with conviction. That resistance of March 28th out there, a couple other points of resistance. You could take a look at the bearish engulfing candle on August 21st on the NASDAQ futures. That high was 28.02, certainly was taken out last Thursday with conviction. Wide price spread out there as it closed out at 28.25. Of course, what the NASDAQ futures did was post-haste. This was mostly because of Apple out there. Not all because of Apple, but mostly because of Apple. You had it it set up a evening star pattern. So now it set up a new resistance area. That's going to be the high of September 7th. That's going to be the 28, 36, 25. So just when you thought things were going to be easy as resistance areas were taken out, you had the Dow raise its hand and said, I know I'm strength, but I'm going to show you some of my weakness out here. You had that confirmation yesterday when there was a lower close. Today, you've got right now NASDAQ futures trading at 27.94. Again, trading back inside, just above the lower part of that range. Use that March 28th high out there of 27.90.25. We'll see where that closes today. But that is where the weakness is in the market. We continue taking a look around the, let's go take a look around the world here. Right now, you've got the DAX trading up 42 points. We'll see what that's all about. The FTSE has been struggling out there, down really just a point. But when you consider the move in the markets here as of late, the FTSE has been showing some weakness out there. The Nikkei up 152. That was up 1.7% last night. Hang Seng up another 1%. The Shanghai up only 0.3%. 877-927-6648. Give us a call. Would love to hear from you. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Future's still up. Let's go take a look at the markets around the world. Let's start off with the DAXy. Let's start off over in Germany here. The DAX completed overnight a 1 to 1.272 A to B equals CD. That A point on the DAX would start off at the swing point low on June 5th, out at the 59.14 level. That's your A point. Your B point was the swing point high that came in on July 20th out at 67.75 out there. That's July 20th. The swing point low came in on July 26th out there, made a 50% retracement, moved down into the 63.24 level, and off of that, folks, it moved right up. The actual 1 to 1.272 A to B equals CD. Price projection 74.18 and a little bit of change. Actually got up to intraday high so far, up at 74.10. That is close enough for my work. Did have a little bit more of an extension. Was looking for the DAX to likely move up into the 75.10 level. That would have made a 1.272 butterfly pattern. If you're taking a look at this on TigerTV, you see that pattern in front of you. Really got great Fibonacci summation, sacred geometry numbers out here, because what you see is you see off of the B to C leg here. So your B to C leg, the expansion of that would take you to 75.10 was also a 2.618. So that 75.10 level still is in play. You know, get to see how the DAX actually trades here today, but it has completed the 1 to 1.272. A move up to 75.10 would not be unexpected, but once it gets up there, what the DAX will do is that should find some pretty serious resistance out there, just simply because of that extension, that butterfly pattern, and just simply the way that they work. If you take a look at where the DAX ought to pull back to, as far as the minimum level, if the high was put in this morning, that level would be the dead cat bounce. That would be the 0.382 level. That would be coming back into the 69.95 level, would really come right back to September 6th, where we saw the breakouts occurring across the markets out here, and that would be nothing more than a normal pullback. It's trading right now at 73.57. If we go take a look at, let's go see what the FTSE is actually doing out here. So if we take a look at the FTSE, unlike the other markets, what you see here is you see nothing but a couple of dojis, 3 in a row. The FTSE, as far as the bulls and bears are concerned, has total equilibrium. I mean, you know, that's what you see with doji out there. It's basically the yin and the yang. It's uncertainty. And if we take a look at that, last time that the DAX had a set of 3 dojis was basically about the same level. When it's trading right now, it's trading at 57.92. Just go look at the days of August 24th, the 27th, and the 28th out there. So it sounds to me like over in the UK, they're not exactly what to make out of, you know, Super Mario's plan, what came out of Germany here this morning. They certainly are not suggesting any kind of conviction out there. We take a look at just simply what the move has been from the high point August 14th out there, out at 58.76 down to the low that was put in on September the 5th. Let me just erase a couple of these lines. It'll be a little bit easier for you to read. So we'll do that again out here. We're going to go from the high on August the 14th down to the low on August the 5th. And what you'll see is that 0.786 level, that was hit intraday today. That would have been at about the 58.24.50 level. Actually got up to at 58.21.25. You got to love it. You want to make sure, folks, that you absolutely go ahead and use these Fibonacci retracement and expansion numbers. I can't tell you why they work. I just know that they work, and it's not just here. If you open yourself up to art, if you open yourself up to just so many different things that are really in front of you, it's always a matter of expanding and contracting. That's what goes on inside each of our lives on a continuous basis out there. If we take a look at the euro, let's go take a look at the queen. If we take a look at the queen, you come from, so there's a couple of patterns here, a couple of sacred geometry numbers that were hit so far this morning. You'd come off of the high from February 24th out here. That high in the euro, 1.34583, all the way down to the low that was put in at about the 1.20 level. What you did was you hit the 0.618 this morning. You also hit the 1.272 expansion. So the 0.618 number, about the exact number, right around 1.29247. My numbers could be off just a tad because of just doing things a little bit quickly here, but basically getting right into that area. That's all you need to be. We're not looking for perfection. Why? Because perfection, folks, can never be obtained. You'll live a life of misery if your standard is perfection, because it's the lowest level possible that's out there. Anyways, you had the euro getting up to 1.29355 and 1.29247. Looks like that was the 0.618, but it also came into a 1.272 expansion. That's off of the highs from June 18th down to the lows that were put in the late part of July, folks. So the euro is at another resistance area. 877-927-6648. We get back, we'll go see how these markets are going to pop and whether or not they're going to drop. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To their races. You got the Dow up 37 points. S&P's up 5. Composite up 12. Russell up 2 points. So lead the charge on the way up here is the composite up 0.4% right now. Microsoft up 22 cents. Intel up 12. Google pulling back a bit, down $3 and change. Cisco up 20 cents. Apple up $3.27. Just $3 and change. Trading out at the 663.50-ish range here. Popping to the upside, you've got Medaware, MEDW is the ticker symbol. They're up 38%. What do we have out here for Medaware? What did they do? Medaware shareholders received $22 a share in cash from Thomas. Who is this? Thomas who? Thomas... can't see it on my screen here, but they're going to be acquired by Thomas Bravo something or other. So they're having a nice premium there, 40% premium. If we take a look at, you got Apple in the second place here, but Apple selling off since the open this morning. Apple up $2 right now. You've got Salesforce Innovation up $2.80. You've got 3S Bio, the ticker symbol there, SSRX, up 20% this morning. 3S Bio, I don't see what's going on news-wise behind that jump. You've got Wynn Properties, WYNN, up a little bit, $1.70, up about 1 6/10%. Stanley Black & Decker moving up again. That had moved up, I think it was late last week, SWK. The ticker symbol, they're up 2.5% this morning. Kohl's, KSS, up 3% this morning. Rio Tinto up again. They were up yesterday. They're up about 2.5%. And Yuku, To-Do. That's actually the name of the stock. YOKU out there, up 7% here. Caterpillar having a nice morning, up about, no, it wasn't Caterpillar. Caterpillar's up 1%. I guess for Caterpillar, that is up nicely. If we take a look at what is moving to the downside, you've got Google leading the charge off $5. You've got Campania Energy. I probably didn't pronounce that properly, but CIG, that's the ticker symbol. They are getting smoked this morning, down 18%. Right behind them, you've got Globecom Systems, GCOM, Globecom off 16%. You got Monster Beverage, MNST off 3% here this morning. And so let's take a look at Apple. What Apple here is doing, folks, Apple right now has a potential, well, there's a couple of possible B points. If we take a look at, Apple made a high out here at 940 on September 10th, out at 683.29. That was just simply going back to the high. We're looking at a 10-minute chart here. You had a prop desk where clearly, I know I see linear selling out here. So I see where the prop desk was selling. You never know if they were totally out of the position that they wanted to, or just was that for the day out here. That's what I'm using right now as a B point, a swing point coming into the 4 o'clock close. You had a million shares out there. The low is 662.10. If that area gets taken out with volume, meaning more than a million shares, it's setting up an A to B equals CD down. And it's a little bit of a, again, this is a 10-minute chart out here. These patterns work the same whether you're trading daily, weekly, monthly, intraday chart out here. So on Apple, what you want to be paying attention to is the low of 662.10. If that gets taken out with more than 1 million shares. What that sets up is an A to B equals CD down, a confirmed one. A to B equals CD down. That would take you into the 648 level. More likely, though, it would get you to 643 out there. That would be on Apple. And if we let's take a look at the daily chart now on Apple. Let's see what is going on out here. And what you can see, Apple, certainly struggling. It's got that 1.272. It says 1.32 here on my screen, but it's got that tiger butterfly that it made. Has been selling off. And, with the announcements that are coming out today, there should be some volatility here in Apple. If we let's go take a look at Google out here. So you've got Google trading down a bit here this morning. Google was taking out some highs. Let's go back and take a look at the Google chart. Of course, I have to put in the right ticker symbol. Otherwise, it's going to be difficult to do that. GOOG. And so Google, after making those highs, has been selling off. I haven't watched this chart here for a few days, so good thing that we're taking a look at it. So you have Google making a high September 7th, 3.2 million shares. You come off of that with only 2.5 million, so not too bad. Yesterday, you come back down with 1.8 million, and so that is coming into this swing point down here from September the 4th. That swing point, though, only has 1.8 million shares out there. Normal pullback here on Google. Let's go see where it's going to find some real resistance out here volume-wise. Let's go take a look at the retracement. Let's go from a swing point low of July 12th all the way up. And you could have gone back a little bit further. I'm just simply from the last leg where we had a run-up. So that's July 12th out at $562.09 up to the high put in at $712. Just simply a normal pullback here on Google, folks, would bring it down to $655. You're at $687 right now. What I would really take a look at is the day of August 13th. That's where Google had a gap up. You did 3.2 million shares. Look for that to really be your area of support out there. That would be the low of 646.68. Again, trade at 687 here right now. And let's go take a look at this Medaware stock, MEDW. That's the stock. There's a buyout going on here, having a nice premium. Let's go see if that is taking out highs or if it was just going back to a normal supply line. MEDW is the ticker symbol. Having a nice gap up here this morning. They closed yesterday in the $15 range. I'm going to pull this back further. Let's put this on a monthly chart. Looks like, So everybody in this equity here is loving it. They're loving life. You can see the about coming at all-time highs up there. That is on Medaware. Let's go take a look at, let's see here. What else? Let's go take a look at this Campania. I don't know why I just simply struggle to say the name, but CIG, they're getting smoked here this morning. Gapping down, looks like gapping down with volume. You moved down on this equity here yesterday with volume as well. Looks like it's well below the last time you saw any kind of volume. This here, so I think we may have taken a look at this equity when it was moving down last, because we were taking a look at this. What's always kind of difficult is when you see when you see high volume but no wide price spread. And that's exactly what this equity had here. And if we take a look at it, that day was the day of February 8th, 2012, did 11.7 million shares. But the price spread, folks, 1660 to a high of 1686 out there. That level was taken out. It was tested here. Let me just draw a line across the, it'll make it a little bit easier for us to actually visually see this. So if we come and take a look at that actual bar, you can see that that area was tested here. The equity pulled back into that range May 23rd, gets down to a low of 1666, 1.9 million. That 1.9 million, going against that 11 million shares, not enough to bust it down. Moves up into where? Moves up right into an area where it broke down, where it started to begin to break down. That was on the April 30th level. You can see where it gaps down. The high of that gap was 1999. Let's go ahead and we'll mark that with, let's blow this up here. We'll go ahead and draw a couple lines across just so we can see how this thing behaved and what it was doing. Let's make that a dark line out there. There we go, so we can see it. So now you're taking a look at the day where it gaps down, April 30th. The high is 1999, does 3.6 million shares. Let's actually draw a line on the volume bar as well. So we'll come down to the volume bar. Let's get that line going across here. And you can see as it makes its way back up there, which is on August 10th, it gets up to a high of 1997. 1997, I believe, going against 1999. Of course, really was 2 million shares there going into the breakdown, the first breakdown of 3.6 million. That was an indication. That was, we talk about, Tom talks about how equities will oftentimes give you 2 or 3 opportunities to get out of the stock. That's certainly your first opportunity was when it gapped down. Your second opportunity was when it moved up into this area. Your third opportunity on here was when it gaps down with some volume on the 31st of August. Gaps down with 7.9 million shares. So it's trying to chisel, it's trying to break apart that ice out there, trying to break apart that high volume day that had no wide price spread. That was your third chance. It gave you a fourth chance yesterday. As you move down below that, you close below that. Once you got below that, that said, hey, that support that was out there just just seems to be gone. Yesterday, this equity moves down with 7.9 million shares. It's going to do more than that today. So far, in just the first 14 minutes of trading, it has done 3.3 million shares. So if we pull this back and see where this thing is coming to, we'll go ahead and put this on a weekly chart, get an idea where there's some volume, if there is. So it's going to move down to this swing point here. That goes all the way back to the week of October 2011. Kind of makes sense. A lot of equities that are getting picked apart one at a time, each getting back at least to the October 4th level. That was where the market put in a pretty serious low. And that would be the week of October 7th. Now, this only has 14 million shares there. You've got wide price spread coming in. And so that says to me that it really wants lower price than that. It'll go ahead and take out that set of swing points. And then where does that set you up? That sets you up coming all the way back to this high volume bar. That's where I suspect it wants to go. That is a low of $7.29 up to $10.05. That takes you to October 10th, 2008 out there. Let's go take a look at, we had taken a look at Chipotle. We had Lou calling in yesterday on Chipotle looking for a possible short. Let's go see what that equity actually did yesterday. Let's draw the lines here. Let's get rid of the patterns that are out here. And what he was looking at, just as we were taking a look at that equity as well, he was taking a look at this gap right here, Chipotle gapping down big, huge volume on July 20th with 9.7 million shares. As we were taking a look at it yesterday during the open, it was trading above that area. Yesterday got to a high of 340.39. It rejected that area. Did it yesterday with 1.1 million shares. The day before, 1.5 million shares. Today, trying to tackle that area. It's gotten up and over it. So far today, 62,000 shares. So this area of resistance is now being tested for a third day in a row. Now, what I was suggesting there is whenever you are, placing a trade here, folks, it's so important to understand what the average true range is. If you haven't tried the tool that I put together, go to the homepage of TFNN.com. Let's go see and check and see if it is still out there. I believe it is in what I call the little carousel, which is over on the left-hand side. You'll see a series of buttons out here. Oh, it looks like maybe that is not in there any longer. Let me just make sure here. Nope, it's not in there any longer. We'll get it back up here in the not too distant. There's the power of position sizing. It's still there. So if you haven't had a chance to check that out, go over to the homepage at TFNN.com. You'll see the power of position sizing. That'll give you the average true range of any equity that you trade or ETF out there. You want to understand that's nothing more than the daily noise, folks, up and down. And if you place a stop too tight, you could have the trade right and just simply get knocked out of your position. You can tighten your stop if the trade starts working in your direction, but you don't want to be knocked out the first day that you've got your money at risk out here. Now, as long as you are over on the homepage at TFNN.com, there are at least a couple things that you also need to do. Number one, the paper that Tom did, the bull market in Florida housing, you absolutely want to make sure that you download that. So click on on that link as well. Also, if you're in the Boston area, Tom will be up there tomorrow. You can go, and you don't want to procrastinate on this because there's some paperwork that you certainly would have to complete. So inside the bull market in Florida is one other spot for you to take a look at the Tiger Fund out here. There's also some other areas inside the web page where we can take a look at the Tiger Fund. But you can always send an email to Kathleen at tfnn.com as well. And then the last thing, not the last thing, but at least one other thing, you got to have at least 3 things to do each day, and that is take a look at our Tiger Dollar promotion, folks. The Tiger Dollar promotion, this is the last time there's going to be change to it. It's not the last time for Tiger Dollars, but it's going to be the last time where you've got this type of promotion that is available to you, where you're going to be able to easily make 20, 25, or 30% on your money. The way that works, if you put in $500, you get $600 worth of Tiger Dollars used for every subscription, any service that's offered at TFNN. It's transferable. $800 will buy you $1,000, and then the beauty, the real Chipotle, the real kit and caboodle out there, the real hot pepper is $1,150. Will get you $1,500. That's a 30% bonus. So make sure you take advantage of that. That expires this Sunday. No time to procrastinate out there, folks. So that's all over at the homepage of TFNN.com. Please check all those great things that we have out there. So that was on Chipotle. Let's go take a look at some of these other stocks here that are moving in the marketplace. Let's go take a look at what else do we have? Large droppers. You've got Globecom, GCOM. Let's go see how that is traded. Well, we know how it's trading. Let's go see if there's volume behind the move. It's down about 19% right now. So that stock chart the symbol is GCOM. GCOM. Whoops. Let me get this in the right spot. GCOM. So that's getting hammered with volume. Big volume, coming back into an area where it also last had volume on the way down. So if we take a look at this equity so far today, my goodness, you talk about volume out of the blue. And it's got the devil written on it, 666,000 shares so far today in just the first 19 minutes of trading. That is on Globecom. We'll come back and take a look at this equity, see where this wants to eventually trade to. 877-927-6648. Dow's up 39 points. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Got the Dow up 27 points right now. S&P's up 4. And let's take a look at Stanley, Black, and Decker out here. SWK is the ticker symbol. Trading up about 3% this morning, up $2 and change. So if we take a look at this stock chart, we're looking at the daily stock chart here. You can see that this thing made a 1 to 2.618. A to B equals CD down. Your A point on this goes back to March 16, 2012, when it got up to a high of 81.90. The B point on this is the April 10th low out at 74.67. Does a retracement. Looks like probably about a 61% retracement up on April 17th. Gets up to a high of 79.24, and then 2 trading sessions later, boom, you got the talk about passing a B point with wide price spread and accelerated volume. Well, that certainly did that on April 19th, as you had 11 million shares, gaps down, moves down. That was your sign to get out of Dodge. This really didn't give you the opportunity to get back out of the stock and never made it back up to the gap low. The gap high on April 19th. It's actually getting up there right now today. That high is 76.24. Makes its way all the way down to the lows. Now, this is a stock, folks, here that was trading at 81.90. Makes its low coming back all the way to July 12th out at 58 bucks. So that's taken a bit of a haircut. Now, comes all the way back into that area, and you see your first sign of strength. You really see the first sign of strength. You see a day where you had some real volume that was going on. That happened to be July 17th, 5.1 million shares. But your real sign of strength came in with wide price spread July 18th. It moves from a low of 59.28 up to 63.92. Does that with 6.4 million shares. Never came back and really came back to the area where it broke out. It did come back and tested the high of that session on July 18th. Pulled back into that with 1.6 million shares on the 25th. Gets down to a low of 63.29 out there. The high was 63.92 on that bar. Now, you've got an A to B equals CD. You got a confirmed A to B equals CD. Let's take the swing point low, July 13th, 59.49, all the way up to the high, your B point, which would be August 7th, out at 69.18. Now, if we take a look at the retracement back here, very shallow retracement. Looks like probably a 0.382 retracement. Let's go from our A to our B point, and we can see that what that is really an exact 0.382 retracement, within pennies, if you will. And so that sets up more than the 1-to-1 A to B equals CD, the 1-to-1. Now, take a look at the, well, let me redraw my B point. Let me refresh my screen here. Looks like I moved that. or possibly my hands weren't stable. Let's go redraw the A to B equals C because I don't want to give you bad information. So again, I'll start with my swing point low out here on July 12th. The B point is August 7th, pulls back into the September 4th level. Now we're talking. Now, the swing point on this, your B point, is going to be August 17th. There's 943,000 shares. This is how you like to see a B point taken out, just like it did. Now, you talk about stock charts having patterns out here. Take a look at the pattern on this equity. It crosses its B point on the way down. How? With a gap down with accelerated volume. Now how does this cross a B point on the way back up? The same thing. Gaps up with accelerated volume. Does that on September 6th. 2.9 million shares. That was taking out 943,000 shares. Take a look at the strength of the C to D leg here is actually stronger than that A to B. It's going to be an interesting fight between the bulls and the bears as this equity gets back to the level where it gapped down from. I do suspect that it will be able to close the gap on this thing. That would take it to 78.51. That's your 1 to 1.272. The low of where it gapped down is 78.23. That is on Stanley, Black & Decker. Folks, thanks so much for being here. Stay tuned. Tom and I will be up next. Then we got a doubleheader with Basil Chapman from 11 to 1, Daryl Martin 1 to 2, David White 2 to 3, the Ken Shreve warm-up band for the Tom O'Brien Show from 4 to 6. Thanks, folks. Have a great morning. Look forward to seeing you real soon. Bye-bye.